start this webinar. So first of all, hello everyone. Thank you so much to join us to this 30 minutes webinar on the beneficial ownership information rule. I'm Jonathan Lopez, Director in Spain at Davis Consulting Division, and I will be the moderator of this webinar. Today, we will talk about what the beneficial ownership rule is, why it matters, and how this new regulation might apply to you. I'm considering this webinar will only last 30 minutes. We will cover only the basic of this new rule. However, if anyone wants to know more after this session, please, you will be able to contact us through our LinkedIn or our website. So let's start with presenting ourselves. Today, I'm joined by two of my fantastic colleagues. First, we will hear from Radeline Polanco, Principal Consultant at Davis, based in New York, with over 10 years of experience in AML compliance, fraud investigation, and banking operation across United States and Latin. And then we will hear from Andrew Moran, a Principal Consultant at Davis, based in London, with over 10 years of experience implementing KYC AML solutions in different financial institutions. So welcome, Rad, welcome, Andrew.
Thank you, Johnny, and thank you everyone for joining today.
Good afternoon, everyone.
It is a pleasure to have you here today, guys. This is for the audience. There will be a Q&A sessions at the end of this presentation. You can submit your question at any time using the Q&A function at the bottom of your screen. And our recording of this webinar will be available on Davis YouTube channel after the webinar. And with that, we will start with our first topic, which will be covered by Radeline. Let's kick off the topic by understanding what is the beneficial ownership information rule.
Thank you, Johnny. So for us to understand the beneficial ownership information rule, we first need to take a step back and understand the Corporate Transparency Act, which was passed by the U.S. Congress back in 2021. And essentially, this law, also known as the CTA, requires certain businesses to report information about their beneficial owners to the Financial Crimes Enforcement Network, known as the famous regulator, FinCEN. So all this is with the purpose to provide the U.S. government with information, or to make it more easier on the efforts for bad actors to hide or benefit from illicit gains, as well as to clarify obscure ownership structure. So in summary, the beneficial ownership information rule aims to provide clarity to the USA government of any legal person or entity who is, one, trying to hide ownership of legal entities behind, of their assets or their funds, and two, of individuals who are trying to do tax evasions, right? So in order to address this issue, the beneficial ownership information was one of the possible solutions for this, so to report this information. And many financial institutions have acquired or incorporated like data provider tools like LexisNexis, Dun & Bradstreet into their processes, which indeed will enhance like the way they acquire information from companies and make it faster and make the data reliable. However, because certain companies were not required to report the beneficial ownership information, there was not, because they were not previously obligated to do so, many of this data was missing. So back in 2021, due to this law, we are now enforcing the BOI, and the only solution that FinCEN came up with was to basically create a corporate public register, which will allow the gathering of three things, like adequate information from these legal entities, two, accurate data, because it's coming directly from the legal entity owners or the person they appoint to provide this information, and the information will be also up to date. So you cannot really beat the type of information that financial institutions will be gathering from this public corporate register. So one of the main changes that I see right now is that obviously the financial institutions were conducting different levels of due diligence on individuals and legal entities when opening a bank account due to the CDD rule that was issued back in 2018. And now, due to this new change regarding the Corporate Transaction Act that the Congress passed back in 2021, this will definitely enhance the way the banking institutions are now gathering requirements from legal entities regarding the beneficial owners. An additional point also to mention is like, who is this applicable to? Who needs the report on beneficial ownership information? So FinCEN created, or by definition, they call reporting, they basically anyone that it needs to comply with the beneficial ownership information reporting, it's being referred to as a reporting company. So basically, any corporations, limited liability companies, such as what we know as LLC, or any legal entity that was created by filing a document with the Secretary of State or any similar government institution within the state they are being formed to operate with within the US will be required to report the beneficial ownership information. So this means also that FinCEN also issue about 23 different exceptions of companies that don't need to report the beneficial ownership information, because financial institutions, or they are already gathering those requirements due to similar additional reporting requirements that were implemented in the past. So for example, your public traded companies, your non-for-profits, banks, money services business, inactive legal entities, tax-exempt entities, basically foundations, or large operating companies will not need to provide or report. It will not be considered reporting companies, because again, they are already implementing this type of reporting requirements from other previous rulings that were issued. So the FinCEN has also provided a little guide called a small entity compliance guide, which basically provides a quick checklist based on the type of entity that you are dealing with. You either check mark yes or no, and if it is a yes, then that company will not be responsible for reporting a beneficial ownership information because they are exempted.
Okay, so Rad, I heard you there, you touched on the jurisdictional aspects of this rule. Could I ask you to elaborate a little bit more on that further? So for example, do non-US entities outside the US need to submit this information also?
Yes, sorry, I did make good catch, Andrew. I did miss to add that by FinCEN definition of a reporting company, they divided it between two different types. The first one being the one that I spoke about those domestic reporting companies, which are companies obviously formed within the US. And then we have the second part of it, the second type, which are foreign reporting companies. So essentially, any entity formed outside the United States, doesn't matter the country, and they are conducting business within the United States, or they have registered within the United States Secretary of State Department, will need to file a beneficial ownership information report as well.
Well, thank you, Rad. I think your explanation was very detailed. You talk about what the rule is and who needs to comply with it. However, let's go one step back. Andrew, I know that you are also an expert in this matter. Can you please define for the audience what is a beneficial owner?
Yes, of course, Johnny. And indeed, the all-important question is, what is a beneficial owner? So technically, the definition of a beneficial owner is an individual that either directly or indirectly has a significant ownership interest in a company. So when I say significant ownership, I mean 25% or more. However, of course, it's not as clear-cut as all of that. Now, you could also be considered a beneficial owner if you execute control over an entity. So, for example, if you are a senior officer, such as a president or indeed a manager who calls the shots, or you run day-to-day operations, if you have authority to appoint or remove certain officers or a majority of directors in the company, or you are an important decision maker in the company, you're probably considered a beneficial owner and you need to register under this act. So the thing is, you could potentially be a beneficial owner and not fully realize it. Therefore, if you're in any doubt, it might be a good idea to seek advice from your accountant or lawyer. So I've spoken about ownership of 20%, of 25%, excuse me, or more. Now, historically, a way for people with ownership of more than this to get around declaring themselves a beneficial owner was through attribution. So, for example, a person with 40% ownership could declare that they only own 24%, and their brother, for instance, they had 16%. So the point I'm trying to make here is that it will be interesting to see if workarounds like this will persist with the new Act, or what new workarounds will emerge. Although, as Rad mentioned, the new measures are designed to prevent such ways of getting around the system. It's also important to point out that the concept of the ultimate beneficial owner, so which traditionally was of most interest in an anti-money laundering context, that doesn't exist within this Act now. All beneficial owners must now register. Now, in terms of important dates around the rule, so January 1st, 2024 was when the rule came into force. So any companies formed since that date have 30 days to submit their beneficial ownership information. All other companies formed before that date have until January 1st, 2025 to submit this information. So this is all still very, very relevant at the moment. Now, with regards to this information that is required by FinCEN, there is the beneficial owner name, date of birth, residential address where the beneficial owner resides. So a PO box is not acceptable. Unique identifier number from an acceptable identification document. Name of the state of jurisdiction that issued said ID document, as well as information around ownership interests and control mechanisms. Also very important to add as well is that non-compliance with these reporting requirements, that also includes failing to report complete beneficial ownership information or reporting false or fraudulent information, can result in civil penalties of up to $500 per day or criminal penalties, including up to $10,000 in fines and imprisonment for up to 2 years. So, you know, it goes without saying the penalties are pretty severe.
Thank you, Andrew. I think all of these are important topics to take into consideration, including the fines. But people now are probably wondering how to submit this information. And I know, Rad, that you have been involved with this process in the past. So can you explain how this process works?
Well, sure. I think that anyone that already has previous experience conducting KYCs, investigation and completed those forms within a banking institution, it will be pretty easy just for them to help submit the beneficial ownership report. And for a lot of people at the beginning, we're kind of panicking about, like, you know, the January 1st of 2024 of this becoming into effect. But FinCEN has actually made it pretty easy for any authorized individual or the applicant, as FinCEN defines it, of the legal entity to submit this information. So for me, I divided it between 4 different steps. So the first one being going back to what Andrew mentioned of the different type of documents that are being gathered. So you first gather all your documents, which I split it between like 3 different groups of data points. So the first one being the reporting company information, such as basically the legal entity, like your company name, address, etc. Then your second set of data will be the beneficial ownership information, which is why this report is being filed in the first place. So you need to have in hand your full legal name of the owners, the date of birth, addresses, either a driver's license or a passport, and then your third group of data that you will need to submit will be the company application information, like the individual that's submitting the information to FinCEN on the beneficial ownership report. If they are not one of the owners or the beneficiaries of this legal entity. So for example, that could be the company lawyer that is responsible for providing this information to FinCEN, or it could be the company secretary. So the information of the person that's actually submitting or completing the BOI report will need to also provide their personal information to FinCEN. Then once you have gathered all this informations, the second step will be to either to access the system for the completion of the BOI report. So you could go to the FinCEN website at www.fincen.gov or look up for the BOI e-filing. Or if you don't want to e-file online, you could also complete a PDF form that they have created and submit it instead of via the portal. So whatever methods work for the company that you are reporting on, you could use it to report the beneficial ownership information. Then the third step is that once you either gather all your data points to submit to FinCEN, and once you know which type of form you want to file, either via the portal to e-file or the physical form, then you will complete this form based on the documents that you have gathered previously, and you have to submit supporting documentation as well, like copies of a passport, the formation documents of the legal entity that you're reporting on. But you have to make sure that before you click that submit button at the last final step, you gotta make sure you double read the information, make sure that the data is accurate to avoid any errors. And this brings me also, Johnny, if you don't mind me jump in here a little bit. Let me just revert back to Andrew. And also based on Andrew's experience, I want to get your point as to what I have just mentioned regarding, like, do you have any comments as to what does the BOI rule mean for financial institutions now, based on like the amount of data that they have to be gathering, and also the new reporting requirements via the FinCEN portal?
Okay, so as I see it right now, the rule may be both beneficial and challenging for financial institutions. So on the one hand, there is now the BOSS system. So that's the beneficial ownership secure system, which FinCEN have created to store all of this data, which financial institutions will be able to leverage for their AML and KYC purposes. So there's an obvious benefit there, as the data has is already collated in the one location. Now, on the other hand, though, with this rule in place, does this now mean that financial institutions won't be able to onboard entities that haven't submitted this beneficial ownership information to FinCEN? Like, are they stopped dead in their tracks in this respect? So the thing is, the path forward is currently unclear, in this particular aspect.
I completely agree with this.
Thank you, guys. I think your presentation has been outstanding, and many questions have been answered today. Now, since we don't have a lot of time, we will jump to the Q&A section. But before we do that, would you like to add anything else?
Yeah, so Johnny, as I've alluded to already, it's very early days yet, and it will be interesting to see how this is going to pan out, since this beneficial ownership rule has only been in effect since the beginning of January. So when the rule was first announced, there was initially concern that the BOSS system, which I've mentioned already, that represented yet another governmental centralized data repository, which by its very existence increases the odds of a data breach. There's also been concern that the FinCEN portal wouldn't be able to handle the huge number of submissions given the relatively short submissions window. So all I can kind of really emphasize here is that, you know, only time will tell how all of this is going to pan out.
Thank you, Andrew. It will be really interesting. I totally agree with you to see how this is implemented early days. So we will see soon. Now, we will cover just a few questions from the audience. Give me 1 second to open. Let's go to the first one. What should a company do if inaccurate data was reported? I don't know who wants to cover this one.
I think
I
Rad.
think, yeah, I think I could take this one. So basically, if a company reported data that is inaccurate, the company must correct it within 30 days of the original date the company became aware that the data has changed and in essence it is inaccurate on the BOI report. So for example, some of these changes could be that the beneficial owner that was originally reported to FinCEN that passed away, unfortunately, and a new person, and that ownership has been passed to another individual. Then obviously the individual's information will need to be submitted. Another sample I could think of this type of reporting update that you will need to do is that because FinCEN is now requiring people to provide driver's license number, passport numbers, etc., as an identification requirement for the beneficial owner being reported. If you renew your passport or if you renew your ID, that will also qualify as a ownership detail that you will need to essence provide to FinCEN. And that means that within 30 days of you being aware, meaning the moment you submitted or the beneficial owners submitted a license renewal or passport renewal and the new number was issued, you need to go into the FinCEN website and submit an updated reporting requirement for the beneficial owner. But please know that there are not penalties for submitting inaccurate data to the beneficial owner's information report, provided that it is corrected within the first 90 days it was originally filed. So there are two aspects of updating report for the BOI. So the first one being any changes being made, you have 30 days to accurately report that to FinCEN if any changes have happened. But if you submitted information originally, like the first time you file the report and you review the final draft and you notice that there's something that's incorrect, you have 90 days from that original submission to correct it.
Thank you, Rad. I will remember 30 and 90 days depending on the situation. I will jump to the second and last question for today. Do I need to report information if a beneficial owner is a minor child?
I can take this one, Rad.
Sure.
So the answer to that, Johnny, is actually quite simple, and no, there is no need to report such information, provided that you have reported the required information about the minor child's parent or legal guardian.
Okay, good to know. Thank you, Andrew. Unfortunately, we're running a little bit late. We'll have much more time. So thank you very much, Andrew and Rad, for the explanation of this new rule, how it impacts, and now we are looking forward to seeing how it is applied and implemented by the institution in the following months. I know we have covered this in a short period of time, unfortunately. So if anyone watching this webinar would like to know more about or needs any advice, please do not hesitate to contact us through our LinkedIn pages or in the link that you can see in the screen to our Davis website. And I would like to end this webinar with thank you to everyone who attended and to wish you a great week. Goodbye, hasta luego, everyone. Bye-bye.
Thank you, everyone.
Thank you.